heard of it before, Profit First is a system for small businesses that provides guidelines on approximately how they should divide up their revenue in order to have a business that is healthy and sustainable and that can run for a long time. Within the system, you'll set up percentages for what part of your revenue should go into 4 key areas. The first of which is profit, hence the name of the system, taxes, owner's pay, so what you take from the business for yourself as a salary, and operating expenses. If you can consistently hit these percentages, or at least get really close to them, then that means that you're putting aside enough money for your taxes, you're paying yourself a reasonable salary, you're covering all of your expenses, and there's still some left over at the end of the month or year. So your business is profitable, which is kind of the point of being in business. I'll break down each of those 4 areas in a moment, but first let's stick with the bird's eye view for just a moment longer and look at the settings and rules page. The Canadian Small Biz Bookkeeping system comes with Profit First already built into it and the revenue allocation percentages set up for businesses that are currently under $250,000 in revenue per year. And that's gross revenue, so revenue before any expenses or deductions. If your revenue is currently higher than that, amazing, congratulations. There will be a table at the end of the documentation page that goes over the Profit First system that will break down what the percentages are for businesses at higher levels of revenue. But the basic setup is that 15% of your revenue should go towards taxes, 50% should go towards yourself as the owner's draw or owner's pay, 5% should get saved for profit, and 30% should go towards your regular operating expenses. These are the targets that you want to shoot for at that level of revenue to have a healthy and sustainable business. So if you're currently at $250,000 in annual revenue or less, then you probably won't need to change anything here. But these numbers are just guidelines to shoot for, and you may find that you need to make some adjustments for your specific situation. Let's say that your business is pretty high income but low overhead, meaning that you don't have a lot of expenses to write off. In that case, 15% will probably be too low for your income tax allocation. Let's say that you need to save more like 20%. The thing is, all these numbers need to add up to 100, and now we are over 100. We're at 105. So we're going to need to take those 5 percentage points from another category or categories. You might split it across a couple of them. If your business is low overhead, you can probably easily take that entire 5% from the operating budget. Now we're back to 100 over here. Or maybe let's say you wanted to take 3 points from the operating budget and 2 from your owner's draw. Same thing, as long as we end up with 100 here, we're good. Or let's say your business is currently in kind of the opposite situation where your operating expenses are really high, let's say 70%. This is a fairly common situation, but it's not ideal, so it's something we'd want to work towards improving. But it's not gonna happen overnight, so maybe let's say for now we set our goal of reducing that by 5%, so we'll put the operating expenses down to 65. And if your operating expenses are currently taking up more than half of your revenue, then 15% for taxes is probably going to be a little on the high side. So let's put that down to 10. So now we have 30 left that we need to split between the owner's draw and profit. So maybe for now we reduce profit down to just 1, and then we'll put owner's draw at 24. And then that gets us back to 100. So again, this is really not an ideal split, but it's a start. And then we can work on improving that, getting those numbers back up for profit, your owner's draw, and your income taxes while getting those operating expenses down. Over time, step by step. Let's say next quarter, you get it down to 60% for your operating budget. Well, now you've got 5% that you can add back in. So maybe let's add 1 to the taxes, and then we'll bump up our owner's pay a bit. So let's talk about what the different areas actually are, and let's start with taxes since they're unavoidable. If you've earned income through a small business, then there will be taxes owing on that income, and you do need to report it. Some folks think that if they don't earn that much money in their business that they don't need to report it, and that's not true. You always have to report and pay tax on any income sources that you have at tax time, and it doesn't really matter how large or small they are. Now, you may have enough deductions and write-offs that you don't end up having a lot of tax owing, but if you've earned small business income, income, usually there's at least a little bit there that needs to be paid. And I should note that in terms of profit first, when I say taxes, I am only referring to income taxes, not sales taxes like GST or HST. If you collect those from your customers right now, sales taxes like that are always kept separate from your revenue. When I had my first business many years ago, I never had any sort of idea what amount of money I was going to be owing for taxes at the end of the year. So I always just kind of crossed my fingers going into my year-end meeting with my accountant and hoped that I had enough money to pay the bill. This is not a good strategy. What I do now is I take 15% of any revenue that comes into my business and I put it aside in a separate savings account that is just for taxes, and then I pretend it's not there until I have to pay. As far as I'm concerned, that is the government's money, it's not mine, and therefore I cannot spend it. Sometimes at the end of the year, I actually end up having more in that account than I actually need to cover my tax bill. So in that case, you can add a little bit extra to your emergency savings fund, or you can pay yourself a little bonus. You might be wondering why 15%? Isn't the personal income tax rate higher than that? Yes, but remember that we're calculating that 15% on our gross revenue, so that's before any write-offs or deductions. The amount that you actually pay tax on is after those write-offs and deductions. So by using 15%, that usually gets folks in the ballpark of approximately what they will be owing for their taxes. That being said, it really depends on your situation. So you might end up needing to adjust that tax allocation percentage number up or down. So you might need to make it higher than 15%, or you might find that 15% is consistently a bit too much and you adjust it down a little bit. If you have your tax returns from the last couple of years and you also know what your gross business revenue was for those years, then you can take a look and see what you ended up owing versus what came into the business, and then you can kind of calculate an average percentage from there. If it's your first year in business or you just don't have that information available, maybe your tax return had multiple income sources on it so it's hard to tell, then just start with 15% and see how it goes. You can always adjust from there for the next year. The next area is operating expenses, and for a lot of folks, this is the one that tends to balloon up a bit and be on the high side. However, if you run a business that is currently at under $250,000 a year in annual revenue, gross revenue, then you want your operating expenses to be about 30% of that revenue. If you have a product-based business, do not panic. This does not include the cost of your supplies or purchasing your goods at wholesale. You always deduct the cost of goods sold from your revenue before applying these profit first percentages. And the system already does that for you, so this is already baked in. You don't have to manually figure anything out with a calculator. When I say operating expenses, I'm talking about recurring things that happen monthly or annually that are required to keep the business running. That could be things like paying for advertising, paying your accountant, a subscription for scheduling software, business insurance, things like that. If you're currently over that 30% mark, even if it's by a lot, just start where you're at and each quarter work on reducing that number by a few percentage points, or work on increasing your revenue, but without spending any more money. That's the catch. It's not going to happen overnight, but if you work on improving things by a couple of points each quarter, then you will get there eventually. You want to be in business for long term, right? It's not a race. The next area I'd like to talk about is profit, because I think this one tends to be misunderstood and also ignored the most. Profit is not the amount that you pay yourself out of the business. You absolutely should pay yourself a salary, but this is a separate amount above and beyond that. It doesn't have to be a lot, but in a financially healthy business, it should exist. Technically, as far as the CRA is concerned, all of your business income counts towards your personal income, but I don't want you to think about it that way. I want you to think about this as if you were the CEO of a corporation. As CEO, you'd want to be able to show that the company was profitable, that you guys had money left over at the end of the year after you paid for all of the salaries, all of the operating expenses, all of the taxes. If you consistently posted losses year after year, your shareholders wouldn't be very happy and you probably wouldn't get to stay CEO for very long. And it really shouldn't be different when you have a small business. If you can cover all of your expenses, pay your taxes, and pay yourself a reasonable salary and have at least a little bit left over, then this is a financially healthy business. This is viable and sustainable in the long term. Even if right now all you can manage to save as your profit is 0.1%, that's fine. Start there and work on building. So if this profit amount isn't meant to come to us as the owner as salary, then what do we actually do with it? The number one thing that I would suggest that everyone do first is to use that money to build up an emergency savings fund, especially if your business is your primary or only source of income. I think this is absolutely non-negotiable for folks that are self-employed, because if something happens and you aren't able to work for a few weeks or a few months, you still need a way to be able to cover your bills. Or maybe you have a fairly expensive piece of equipment that is vital to the operations of your business. If that were to break down, you'd want to be able to replace that quickly and easily without a lot of stress or going into debt, nothing like that. I suggest that folks work towards having at least 6 months worth of covering their personal bills as well as their business expenses saved up, but some folks prefer to do a year. It really just kind of depends on your situation, your personality, if your business tends to have a lot of ups and downs or not. You can put it in a high yield savings account so that it earns a little bit of interest over time as well. I can appreciate that you might not want to leave a large sum of cash just sitting in a savings account, even a high yield one, as it could be earning more money elsewhere. But if there was an emergency, you'd want to be able to access that cash quickly and easily. So I wouldn't recommend putting the whole amount into something like a GIC or an index fund where it would have to be cashed out first before it was accessible. I'd leave at least a month's worth of cash just liquid in a savings account where you could access it easily if you needed to. Once you have that emergency fund saved up, then you can do some really interesting things with the profit amount. At the end of the year or quarterly, depending on how much revenue you have coming in, you could look into investing some of that money back into the business. Maybe there's some upgraded equipment you'd like to buy. Maybe you want to develop a new product or service. Once you've got yourself fully covered and squared away, things get really fun and interesting because now you're in a really strong position financially speaking. So you can follow things that catch your interest or that seem like a fun project to you. Finally, we have our owner's pay, and as I said previously, technically the CRA considers all of the business revenue as your personal income, but we're going to put our CEO hats on and think of it as separate from us. Even if you have no interest in growing the business beyond you being the sole employee and running out of your garage, let's work on you being able to do that for a long time. And part of that is paying yourself a sustainable salary. So neither taking all of it as personal income and leaving nothing to grow the business with, nor paying yourself nothing or pennies for all of your hard work. That is the fast track to burnout, trust me. So what is sustainable for yourself and your business? You want to aim to pay yourself about 50% of the revenue as your personal salary. You might be way over or way under that number right now, and that's fine. Like with the other categories, just work on improving that by a couple of percentage points each month and you'll get there. So let's take a look at the profit first guidelines and those revenue allocation targets in action in the Canadian Small Biz Bookkeeping system. On the monthly overview sheets, they are up in the reporting area right here. They show you, based on what your revenue was for the month, approximately what you should have allocated towards each area, what you actually did, and then what the difference was. It will highlight it in green if you are on target and highlight it in, well, not red, but let's say terracotta if you're off target. Off target can either be overspending or underspending. It depends on the category. So for example, for something like operating expenses, if you have gone over the budgeted amount, then that'll show up in this highlighted color. And for something like profit or taxes, where the goal is to save a specific amount, it will highlight it if you are currently under that amount. You can see for the owner's draw, we are currently under. We still have about $450 left based on that month's revenue that they could have taken out for their draw, for their pay. So that's currently shown as under, but it's also not a problem. That's why it's not highlighted. And the profit first totals are kind of like your operating expenses in that it's important not to get too hung up on the monthly view and to zoom out and take a look at the bigger picture sometimes as well, because you can see, for example, for this month, this is their January sheet. They were over by quite a bit in their operating expenses, but if we look at what they actually spent money on, they had a big accounting and legal expense this month. It's likely an annual one. It's not going to come up again this year, so that's fine. If we take a look at the P&L statement, the profit first totals are down here. So even though January was over, in the grand scheme of things, everything's still looking good, so no cause for alarm there. The last thing I want to show you on the monthly overview sheet is how you track things like profit, taxes, and your owner's pay. Operating expenses get done automatically, but whether you move the money for other areas into separate savings accounts or just earmark them and leave them in one account, you'll want to know what amount you're allocating to each area to see if you are on track or not. And you'll do that under the withdrawals log. So you'll see under the expenses drop-down menu, we have some options that are in red here, and this is where you will find the labels for your profit first allocations. Withdrawal is owner's pay, and I might actually rename this option in future versions of the system because I can see how that would be confusing. Profit is profit, as expected. And then income tax savings is the amount that you set aside for paying your income tax. And that is what will get counted towards the income tax total for your profit first allocation. Remember, we do not include money that has been put aside for sales tax savings. Those have their own separate labels down here for GST or HST as well as PST. Even if you store the amounts for your income tax and sales tax savings in the same savings account within your banking system, that's fine. You just want to make sure that you record the withdrawals separately so that it's clear within the system which ones were for your income tax savings and which ones were for sales tax savings. You just don't want to get the sales tax mixed up with your income tax because that's going to throw off your profit first totals. And if you want to, on the settings and rules page, you can set up rules for all of these. So you'll see this one, if it's got owner in the label, it will automatically apply the tag for withdrawal. If it says profit, then it automatically gets tagged as profit. Tax savings gets tagged as income tax savings. So you can save yourself a little bit of time on the categorization. So you see here we have withdrawal, owner, and that has been labeled as withdrawal. And that would have happened automatically. The system would have done it for them. Same with move to profit savings, move to tax savings. Those automatically would have had those labels applied. So let's say I added another one. This person had a little bit of room left where they could have taken out more owner's draw. Let's say they decide to do that. Let's add that in. So you'll see the system automatically applied the tag of withdrawal to it. So once or twice a month, like on the 15th and then again at the end of the month, I recommend going through and doing your allocations. So let's take a look at this example. So we're on the June sheet. It looks like they've already done their one for the 15th. So let's say we're at the end of the month, we're at the end of June, and we're looking to do our allocations for the second half of the month. So we're going to start up top and we're going to see, okay, this is what we're shooting for in each of these areas. This is what has been allocated towards each one so far. So this is the difference. So right now, they have room to take out about another $3,000 in their owner's draw. They need to put aside another $335.84 for profit, a little over $1,000 for taxes, and they've still got room in their operating expenses budget, which is fine. You don't need to do anything there. And that helps to make up the difference for those other months like January where there was an overage. Some folks are like, oh, I have extra money left in my operating expense budget for this month. Should I reallocate it towards one of these other areas? Not yet. Maybe like in December, if you've got some extra operating expenses, you're pretty much at the end of the month. And when you zoom out and you look at your overall annual amount as well, you're still quite a bit under budget. Then heck yeah, at that point, sure, why not? Put some extra into profit. Maybe pay yourself a little bit of a bonus. Who knows? But if you're still mid-year, if you've got extra room in your operating expenses budget, great, but just leave it for now because you might have bigger expenses come up later in the year that are going to put you over for some months, and this will just help to kind of smooth that out on the annual term. So if I actually have a separate business bank account set up, meaning that my business income doesn't get deposited directly into my personal bank account, I do have a separate one set up, and I do recommend doing that. It just makes your bookkeeping so much easier. You don't have to open an account that has a lot of fees or anything. You can use like a free one from a fintech company like Simply Financial. They're Canadian. There's no fees. They don't have any minimum deposit amounts. It just makes it so much cleaner and easier if all of your business revenue goes into a business account and then you kind of distribute it from there. But let's say that is my setup. I do have a separate business account. This is the end of the last day of the month. I would log in and I would start moving these amounts of money out. So I know the system's called profit first, but I always deal with the taxes first. Just because it's unavoidable. I think it's the most important thing to square away first. You're going to stay out of trouble. You're going to make sure that you definitely have enough money to pay your income tax bill at the end of the year. I just sleep better at night knowing that, so that's me. So I can see right now that I've still got a little over $1,000 owing. I usually just kind of round that up. So I would log into my online banking and I would move $1,009 into my tax savings account. And then you're going to want to make sure you record that down here in your withdrawal log. So and and the system automatically tagged it for me. Okay, so that one's done. And now we can see that the tax amount has changed to green. So I've actually oversaved by about 50 cents. So that one's happy now. Next, we'll go to profit because it is technically supposed to be profit first. So I am short about $336 in that. So again, I personally have a separate savings account set up for my profits. So I would go into my online banking and I would move that amount into that savings account. Even if you don't have a separate account though, I would still earmark that money as your profit. You can track it in a spreadsheet or something like that, like how much within your account is currently set aside, quote unquote, for profit. And then I would log it down in the withdrawal log below. Even though you didn't actually withdraw it from the account, I would still just make a note of it so that the system knows that you have at least mentally, spiritually, emotionally set that money to the side for profit. This business is currently short that amount. So again, I would just round that number up to 336 and then I'll make a note of it down here. And that should automatically get tagged as well. So then when I go back up to the top, I can see, okay, we're looking good now. Everything's green, but I haven't done my owner's draw yet. I've still got a little bit of room here. You could take out the full amount. I like nice even numbers, so I'd probably do something like 3,000 or 3,200. And again, even if you don't actually withdraw the money, even if it's just, it all stays in the same account, I would still just sort of, again, just earmark it in the system. And then when I go up top, still green. And that's all you need to do. Operating expenses happens automatically because it's based on what you log for your various expenses down here. So that you don't need to do anything extra for that. And then you can take a look and see how you're doing. See if you are on track with those targets or not. You know, ideally you want to see everything be green here at the end of the month. Don't forget to take a look at the annual totals and see how those are looking as well. Like really, end of the day, that's more important, is that the annual amounts look good. But the monthly, I think, helps keep you on track and helps give you a sense of how things are going. So, you know, like this one's over, but that's fine. If we look at the next one, we were over again a little bit, but there was probably some expense that came up that month that didn't happen for the rest of them. And then March, we're good. We're back to being under on those operating expenses. Oh, this one we didn't quite set aside enough for our profit or our taxes. You know, it's not going to be perfect every time, but the important thing is that overall things are looking good. And that's it. I think Profit First is an absolute game changer for small business owners. It's just really helpful to have these guidelines around how you should be dividing up the revenue that's coming into the business. I know for myself personally, it made a huge difference once I started using it. I have been using it in my business for several years now, and I wholeheartedly recommend it to any small business owner. If you want to go deeper on the Profit First system, go directly to the source and read the book Profit First by Mike Michalowiscz.